How's it going, everybody? It's Stas here. Hope you guys had a great July 4th, a great long weekend, and are ready to get back into it. I for sure am, and in today's video, we're going to break down the markets, my thoughts on everything going on right now, my game plan for this week, and of course, we're going to break down some stocks, guys. So sit back, relax, take a sip of that good old coffee, go down below, get your 2 stocks from Webull. All you have to do is use my link, deposit $100, and we each get 2 stocks up to $1,600. And you guys could check out my Patreon if you're interested in all my real-time moves in the stock market. That is also linked down below. And without further ado, let's get right into the video, starting off with SPY, which tracks the S&P 500. And if you guys have been watching the markets, if you have not been living under a rock the past couple of weeks, you should know that the markets have been unbelievable. SPY, which again tracks the S&P, has gone from $412 per share, and this was back just a little over 2 weeks ago on the 20th of June. We've gone from $412 to over $434 on Friday, which, by the way, that was an all-time high, and that was a move of almost 5%. And if you guys look at the markets historically speaking, right, a very good year would be 10-15% in a year. A poor year in the markets would obviously be a negative return, and the average is anywhere from 6, 8, 10%, depending on what time period you're looking at. So 5% in a little over 2 weeks in terms of 412 to 434 on SPY, that is absolutely unbelievable. And if you guys saw my video from yesterday, we covered how July, historically speaking, the first 10 sessions tend to be the best in the markets, right, in July, with an average return of 1.5%. I highly recommend you guys go check out that video from yesterday. I'll link it down below because we do talk about some real hardcore data, statistics in that video. I show you all a chart, so go check it out. And it's crazy. I mean, July, even though the markets are super overbought right now, in my humble opinion, and I'm still sticking to that, July still tends to be the best month. So who knows? We could see an even bigger push here, followed by a pullback later in the month. That's kind of what I'm thinking right now. And when it comes to QQQ, this tracks the NASDAQ 100, right? This is a heavy tech-oriented ETF. What do you know? This also hit an all-time high on Friday at $359 or $58.97. And let's look for fun to see how this is done since June 20th. It's got to be over 5%. It's right around 5%. So this and the S&P, they're both up about 5% in the past 2.5 weeks, which is just unbelievable. And if it was a perfect world, if I could just swing my magic wand like this is Harry Potter or something and things go my way, I would want to see QQQ pull down to 340. I think that would be a healthy spot right around the 180 SMA on the 4-hour chart here. That would be a 5% pullback. In other words, that would mean all the gains from the end of June, we'd give those right back, and I'm okay with that. I'm okay with that because I understand that whenever the markets move up aggressively, they need to see a healthy pullback. In fact, we've seen this happen many times over the past couple of months. You guys can see here in February into March, we dropped about 12%. In May into the middle, well, throughout May, we dropped about 7-8%. So I think a 5 to 7 to 8% pullback here would be awesome. Again, in a perfect world. And of course, it's not a perfect world, guys. I can't just swing my magic wand and do whatever I want. So we just have to kind of, wait and see how things pan out. And for SPY, if it was a perfect world, I mean, look, I'd love to see this pull back to the low 400s in reality, whether it's 410, 405, 415. I'd like to see a 3 to 5 to 7% drop in the S&P 500. And I'd love to know what you guys have to think. Shoot me a comment down below. Smash that like button if you guys are enjoying the video thus far. And the way that I'm navigating this market overall, and I feel like a broken record saying this, but I'm not completely on the sidelines. I do have open positions. I've been closing a lot of positions. I mean, you guys on my Patreon know that. I've locked in ChargePoint. I've locked in Tesla. I've locked in NEO. But I'm also playing offense. I still have open positions like DraftKings, a bunch of gold stocks. And the way I'm navigating right now is, yes, I'm playing a bit of offense, but I'm also on the defense, right? I don't have put options or anything like that. I'm not shorting the markets or anything crazy like that either. But I am holding a good, healthy, it depends on who you're talking to. Maybe it's an unhealthy amount of cash, but I'm holding a good amount of cash. And a lot of people might say, and by the way, I'm holding 50% cash right now. A lot of people might be like, Stas, that's too much. You're crazy. Put more in the markets. And other people might be like, yo, Stas, you need more cash, man. So it really depends on who you're talking to. But for me, in my trading account, and let me clarify that, this is in my trading account, my active trading account, I have 50% cash, and that is good for me. And you have to ask yourself, because again, it's all relative to the person out there, what is your risk tolerance? What are you willing to have in the markets trading right now? And what do you want on the sidelines waiting for that next dip? It's all relative to you, and for me, I have 50%, roughly 45, 50. It fluctuates. I mean, if I buy a little something here or there, it's going to fluctuate, obviously. But right now, roughly 50% is what I'm holding. And I'd love to know what you guys are doing. Shoot me a comment down below. And with that being said, let's talk about what I'm looking out for this week. And it really comes down to the Fed minutes. The Fed minutes from its last meeting will be released Wednesday afternoon. So I'm assuming around 2:30 p.m. here on the East Coast. And there's potential for the market to learn more about the central bank's behind-the-scenes discussions on winding down its quantitative easing program. And it doesn't take a mad scientist to understand this, or maybe it does. I don't know. It depends on who you're talking to. But right now, the markets are relying on two things. It's really two things: interest rates and the bond buying. The 80 billion here, the 40 billion there, right? It's 120 billion asset purchases per month at this point, which is just crazy. And we're going to see more information, more behind-the-scenes discussions, data points on whether or not we're going to see the rate hike sooner than expected, what's going to happen with tapering. Is tapering coming, or is it not? And at this point, the question is, when is it coming? We know it is coming. The question is, when is it coming? I mean, you guys remember a week or two ago when James Bullard came out, St. Louis, Fed president, he said, oh, rate hikes are coming late 2022, and the market's freaked out. If we get some news like that, and we see hikes coming sooner than expected, we see the bond buying cutting back sooner than expected, this could drop the markets, and my wish could be granted. Me trying to wave that magic wand to get the markets down, that could be granted if we do get this information. And then on the flip side, if we get news that, maybe it's going to be here till late 2023, 2024, if that 2024 year starts coming into play, which I doubt it, I'm thinking hikes are coming late 2022, 2023, but if they start talking 2024, which I don't think they've mentioned that date or that year, but if they do, let's say hypothetically, the markets could rally. The markets could rally pretty hard on that, because it's really at this point, the markets are running or they're really waiting to see what's going to happen. They want to push this back further and further, but the sooner it comes in terms of the rate hike and the quantitative tightening, right? It's freaking the markets out more and more. So it's really interesting what's going on right now, guys. It's a game of of patience. Let's put it that way. It's a game of patience, and that's kind of what I'm waiting for this week, and that's another reason as to why I'm holding about 50% cash in my trading account. So what are your thoughts on that? Drop me a comment, and I love to interact with you guys as always. And now let's talk about some stocks. NNDM, Nano Dimension, is one that I'm looking at this week. I got a couple comments on this. I got some tweets on Twitter, which, by the way, follow me at StockSurfS on Twitter and on Instagram and on TikTok for that matter. I'm posting a lot of content on TikTok. It's at StockSurfS on all of those platforms. Just one word together, StockSurfS. I guess it's two words because it's my name. But anyway, you guys get it. Follow me on there. And I've been getting a bunch of comments on NNDM about the inverse head and shoulder. And we covered this a couple videos ago. And you guys can clearly see it as well. I mean, if you've been doing your own technical analysis, it's pretty obvious. If I zoom in a bit here, we have the left shoulder, the head, the right shoulder, and we got a pretty big pullback recently. I mean, we were just over $9 a couple days ago towards the end of June here, and now we're down to $7.75. So this thing's getting beaten down. It's almost in a bear market in the past couple of days, which is nuts. But then again, is it that nuts considering that NNDM, it's a small cap company, it's very volatile, so it going into a bear market, I mean, it's not that crazy. And at the end of the day, I mean, look, we're still holding the neckline. Right, we're still holding that beautiful old neckline here, meaning the inverse head and shoulder is still intact. We're holding the uptrend as well, meaning we're holding a higher low above the 180 SMA here on the 4-hour chart. Now, all we need, in my opinion, is a breakout of the 5-day, 5-minute downtrend, which we're still in at this point. So if we break out of the downtrend, we start moving out of the moving averages here, we start taking out the highs from not only Friday, but Thursday as well. Start pushing back into that $8, mid-$8 level. If we start to get that, guys, you better believe that uptrend's going to continue on that 4-hour chart. We're going to be bouncing off that neckline as well, like I said, and we're going to be moving higher towards completion of the right shoulder, whether that's at $10.50 to $11 to $12 per share. I don't know where it's going to go, but overall, this pullback, it very well could be a dip buy entry point for those that are long and believe in NNDM. That's a tongue twister, kind of. Yeah. And I'm not telling you guys to buy. Of course, you must always do your own research. But for my understanding here, for my analysis, that is what I'm seeing. So don't freak out. Don't panic over this pullback. It's simply a pullback on a stock that over the past month and a half has gone up about 41%. That's what you have to understand, guys. If a stock goes up an extraordinary amount, it's going to pull back. And I mean, look at this. NNDM was $5.60 in the middle of May. It ran all the way to $9.30. I mean, come on, guys. That is a rally of 40%. 45%, more than that. What am I saying, guys? That's got to be more than 40%, more like 70%. So, gosh, I mean, yeah, it's pulling back, rightfully so. Now we just need to see if buyers step in the mid 7s, high 7s, low 8s. I believe that's going to happen. And NEO is another one that I mentioned earlier in this video, how I closed out my NEO swing position. That was at $53.30. I made a little bit, I think it was around 20%, maybe a little bit over 20% on that swing position, and it was very overbought. I mean, this stock went from $45 to $55 in the span of a couple of days. That was a 20% move, and even before that, I mean, in the beginning of June, NEO was $40 per share. So from June to July, it went up 25%. So I was thinking a pullback was around the corner. I ended up being right. And now it's trading at about $50. And if it breaks under 50 and starts pushing towards 47, 48, right around that 50 SMA on this 4-hour chart here, I feel like I'm going to be getting intrigued at that point to maybe start adding back into it. Maybe start buying a swing back, into this position, or into the stock rather. So I'm going to be watching NEO this week. It was overbought on the RSI. Now we're, at a reasonable point on the RSI. And I'm thinking if we break back over 52, that could be the confirmation that, hey, we pull back and now we're ripping back up, maybe towards 55 per share. So I'm going to put my alert at 52 on NEO. But again, be mindful, guys, this could still pull back more. I mean, if we break under the low from Friday, which let me see what that was. Okay, wow, we actually got to 48.50 on Friday. If we break 48.50 low from Friday, maybe this does end up going down $46, $46.50, and that could be another pullback of about 5%, 6%, 7% from where we are right now. So I'm going to be watching NEO. Shopify is another one I'm looking at, ticker symbol SHOP. And this is one that hasn't pulled back that much, but it's still down about 7% from the recent all-time high at $1,552 per share. And now we're trading at $1,465. So I'm thinking if Shopify can hold, which it is as of now, the mid-1400s, and on Friday we closed at $1,460, right? If we hold this point and gap up, let's say tomorrow, some point this week, maybe we fill the gap to 1,500, which is also a big sticking point from last week. I mean, we failed at 1,500 multiple times. Let's say we fill the gap to 1,500 and break 1,500. From there, we could be shooting straight back up to all-time highs at about 1,550, giving it, from where we are now, about 5 to 7% more upside, right? Excuse me, guys. So, yeah, watch out for Shopify. Although, admittedly, if it breaks under mid-1400s, we'll probably fill the gap back to 1370, maybe even lower. And in a perfect world, I mean, I'd want to see this pull back even more, probably down to about 1300 flat. That'd be a nice entry, right around the 180 SMA here on the 4-hour chart, which very well could happen. If we do get a market pullback in general, you guys have to understand, like I always say, certain stocks will pull back more aggressively than others. So Shopify is more volatile. It'll likely pull back more than the overall markets, and we could get that entry point at about 1300, which goes back to what I was saying earlier. Patience. Patience is key. Having cash is important, waiting for those opportunities, so I'll be waiting for that. GDX is one that I'm also looking at. It seems like we found a nice base at about $34 per share, 33 roughly. Now we're starting to move above 34, and that was a sticking point from a couple months ago in the middle of March. We also held 34 as support in the end of April, early May, so I want to see if we could break 34 into 35. Well, we already broke 34. But let's say we break 35. I'm going to put my alert right there. This could end up filling the gap back up towards $40, maybe 37 initially, followed by about $40 per share, which could end up being a move of anywhere from 5 to 10%. And if you guys are in my Patreon, you know this. I've been buying GDX on the dip pretty religiously as of late, more in my long-term accounts. So I'm going to continue adding into this, especially if it does fall lower. And I feel like it could open up a trading opportunity if it breaks 35, like I said, up to 37. That's a 5% move. And from 37 up to about 40, that's another 5% move. So overall, there's 10% upside here in GDX. Sunrun is another one I'm looking at, ticker symbol RUN. And this one is on the verge of breaking out. Look at what's going on. We're out of the moving averages. We're trading above both of them. We're seeing a golden cross, all of that good stuff, right? We broke above not only $51, but now above $55, which was a sticking point for months here on RUN. And we're noticing an ascending triangle forming on the 4-hour chart. We're making higher lows, but we're struggling breaking out of now $57, $58. So I'm thinking if $57.50 breaks, I'll put my alert right there. This could end up being a big runner, maybe up to Let's take a look here together, guys. Probably 65. That's a reasonable price target considering previous resistance points from back in March, early April, also from back in November. So if this ascending triangle plays out, there's going to be anywhere from 10 to 15% upside here on Sunrun. And we got to watch Virgin Galactic as well. This is one that I day traded on Friday, made about 1.6% on my quick little 15-minute move on Virgin Galactic. And it seems like we found a pretty strong support above the 180 SMA here on the hourly chart at a higher low at about 45 per share. So I'm going to be looking to see if we end up rallying above 45 and if we start pushing up towards high 40s where we were back on, I think that was on Wednesday, right? Do we start pushing up high 40s? Do we breach back above 50, which ultimately I think we will end up doing, considering now in 6 days we're going to see Branson and the whole crew going up into space, which is huge. And if that's successful, I wholeheartedly believe Virgin Galactic, at least in the short term, no one knows what's going to happen after, but in the short term, I think there's going to be hype. I think this is going to rally, and we'll be able to make some money on this. And I'm going to look for a potential entry on this tomorrow. We're going to be watching it closely, so watch out for that. And I'm also, to end off this video, before we end off this video, I'm watching 2 big tech stocks. One of them's Amazon, AMZN. We're seeing a nice breakout on this, up over 2% on Friday. We took out the highs from the past couple of trading days. Now we're pushing up towards that high from the end of June. And I believe if we break that high, and we also break above, this 35.50 level, 60 level, there's a straight shot to all-time highs here on Amazon stock. So I'm going to be watching that 100% this week. And, I mean, it looks like tech's doing well, big tech at least, And Apple, AAPL, is one that we talked about on Friday, but I want to recap here in this video. This one went up about 2% as well, same as Amazon, and we broke above 138. Now we're about to cross over $140 per share, and I'm going to be looking for a move up to the mid 140s, which is that all-time high from a couple of months ago. And I did touch upon this in my video yesterday on Sunday, which again, that's linked down below. Go check it out. I feel like a lot of these big tech names, and specifically Apple and Amazon, they've been very stagnant in the past year. So if we end up seeing a breakout in these, Apple above 145, Amazon above, that all-time high, this could end up dragging up the markets in general, especially if Facebook, Google, Microsoft, they also participate in the rally, because you have to understand, guys, these stocks, they're just such a big weighting in the overall S&P and the markets in general. So watch out for all those. I hope you all enjoyed the video, guys, found some value in it. If you did, smash that like button, subscribe, drop a comment, check out my Patreon if you guys want all my buys, sells, call outs, all in real time, by the way. And if you're a top tier patron, you get a morning update video every single day. That's on Patreon, link down below. Or you guys can go to StockSurfest.com/Patreon. That's StockSurfest.com/Patreon. Make sure to also get your 2 stocks from Webull, your $30 from M1 Finance. All of those are free. Link down below. I'll catch you all in the next video. Thanks for tuning in again. As always, keep crushing the market. Stay safe out there, guys. Peace out.